brace yourself because I'm about to drop a truth bomb that could change your trading game forever. Consider this your ultimate warning before the market truly takes off. If your mentor is preaching, let volume be your guide, without diving into what volume truly entails and how to decode its secrets effectively, then you will continue to wonder why your trades keep tanking. In this video, we're going to cover the true meaning of volume. Make sure to smash the like and follow with the notification bell on. Now, let's make this money. First thing we want to do is put our volume on. So let's go to indicators and then just type volume. And it's going to be this one without the name. This is from TradingView. So now that we have that on the chart, let's go ahead and put this on its own pane. Make sure you're hovering over the volume. You're going to right click, move to new pane below. Now you're able to adjust the size of this. Let's go ahead and adjust the window or the pane. And before we continue, let's identify what websites say volume is. Now, one of my favorite places to go to is Investopedia. Their information is based off of stocks, but we can still use this for crypto. So their key takeaways: trading volume is the total number of shares, or in our case would be crypto, the amount of tokens traded during a given period of time. So this could be on the 4-hour, the daily, and so on. Now, investors often use trading volume to confirm a trend's continuation or possibly a trend reversal. And this is the one that most traders are taught by their mentors. And this is when you have buy the breakout. Then of course, mentors also talk about taking profits when you have low volume and increasing price, because that's divergence. And then the last key takeaway is use other indicators as well. All of the mentors that I've had teach this right here. Increasing volume, generally the price increases. It goes in the same direction. So this portion right here talks about price going up and possibly the volume going down. So this would be divergence. Now, there are some truths behind what we can find on the internet. For example, increasing volume and also increasing price could be a really good buying opportunity. Decreasing volume in an uptrend may suggest time to take profits. Increasing volume in a downtrend could suggest that the price may continue going down. Decreasing volume in a downtrend might also suggest a reversal is about to come. And I'll be providing my thought process on low volume. Is this bullish or bearish? Well, that all depends, and we'll go over that in just a moment. So as a recap, for volume, it's used for market confirmation, whether it's going up or down. We also have possible trend reversals and the famous let volume be your guide for volume confirmation of a breakout. And volume also helps identify accumulation and distribution. The way I think of volume equals activity, the activity of buying and selling. Volume could mean that there's a lot of activity of buying and selling from a lot of buyers and sellers. Or it could mean there are fewer sellers/buyers. When looking at volume, it can be pretty tricky, because are you looking at one bar? Are you looking at a segment, which would consist of several bars? And how large is the segment you're looking at? Is it only this part right here? Or is it all of this, which is lower than this? Personally, I look at both. I look at a segment and also the most recent one versus the previous one. And of course, I'm referring to the volume bars. So let's break this down just a little bit further. At this area right here, we have price coming down, volume coming down, and on this last volume bar, we had a huge spike. However, there was not a huge spike in the price action. Volume talks about the activity of buying and selling. This would be divergence based off of this single candle saying that the price should go up. Does that mean that it will go up? Nope, sure doesn't. It could continue falling until it finds support and then bounce up. But in this particular case, it did come up. However, the volume went lower. Price is going up. So here's divergence once again. Now the price should go down. But as you can see, price came sideways and the divergence did not play out. It went even higher. And a pro tip, I get this question asked a bunch. What makes these green or red? The volume, green or red, is in direct correlation with the price action, green or red. So here we have a green, a red, a green, and then several reds. Now, what makes the candle body green or red? When the candle body closes above the area of its open, it's green. So here, the candle body closed, this next one started, and it finished right here. So because it's higher than its open, it's green. On the next candle, it started here, but since it closed lower than its open, it's red. Now looking at this candle, let's go ahead and do Alt-V so we can keep track of it. I'm going to double click in the pane, and we're going to see that the volume was high, and then it went higher. Price action was high, and then it went higher. Next, we see the price action is right around the same. It closed a little bit lower than its open. However, the volume dropped. And we have another volume that's even lower with the price coming down. What that's telling us is that there's fewer people or fewer traders buying and selling. However, they are selling at a lower price. Let's say the price action is doing this and your indicator is doing this. So it's matching it up pretty well. And then it comes down here and it starts doing this. So now you have your price action going up. However, your indicator for this one, it would be our volume, is coming down. This is telling us that there are fewer buyers, but the buyers that are around are willing to pay a much higher price. And that's what drives the price up. Now, the reason they say this is divergence is because eventually you should run out of buyers willing to buy at a higher price. And this would be called divergence. So now, more than likely, price should come down. Now, let's say the market's down, and this coin happens to be up 12%. And other traders, they're in trades where they're only up 2% or they're at a loss. They happen to see this coin, and what they end up doing is they end up entering this coin because they see that it's up 12%. Now, because there should have been divergence, the price continues going up. And because more people are joining this coin, now the volume starts going up as well, taking away the divergence. Once again, the volume is the amount of activity, and the amount of activity can always change. If we have increasing price and increasing volume, this is good. This is saying that there's a lot of activity, there's a lot of momentum, people are interested in this coin, and it continues to go up. Lots of buyers and sellers. Now let's say that there's increasing price and the volume isn't so much, it's pretty low. That does not mean that the price is going to come down, because there's always a chance of more people coming in as volume due to the price going up and people entering the trade. Now let's look at this chart. We have increasing volume from this bar and the previous bar, increasing volume. Now, it's always told by mentors, buy the breakout on order confirmation. Right now we have a nice green candle. We have increasing volume. Let's go ahead and go to the next bar. Here you have increasing price. However, the volume is lower. Now, if you're just looking at it bar per bar, more than likely you would not enter this trade because the volume isn't greater than the previous volume. However, if you're looking at this as a segment, here we have lower volume compared to the most recent volume being printed. So if you're looking at it per segment, even though this volume bar is lower than the previous, it's still higher than this previous segment. So in that sense, you could enter this trade. But if you're looking at it bar per bar, you won't. Let's go to the next candle. Now let's say you just saw this coin and you're charting it out. You have your trend line. You see that the price action's going up. However, volume, this segment is starting to come down. Would you enter this trade? This is showing divergence. It's different. This is going up. This is coming down. If you're letting volume be your guide, more than likely, if you were to just see this right now, you would not enter this trade because you would think that the price action should come down, hopefully do a retest here, and then possibly enter. So more than likely, you'd be waiting due to this divergence, due to the volume being your guide, you would wait. However, I know that it needs to break this level. I trade based off of support, resistance, and trend lines. I show you how to trade without all the complicated terms or pattern memorization. I make trading super easy. This would be our level that we would have to watch. In addition to this level, this is more of a zone that it needs to break out of. If we were to enter in this zone, it's higher risk than entering up here. And I'm going off of the candle body closes. Now, whenever you do your lines, make sure to have your magnet tool on so you can be very accurate. So I'm just going to go ahead and place that again. And again, it's on the candle body closes. So for me personally, I would not enter this trade, not yet, because it's only a sliver, a small little piece of the candle body close above this resistance level. I'd have to wait for another candle. Let's go ahead and see what the next candle does. All right, so now the price action is coming down. The divergence that other people would have seen is starting to play out. However, with divergence, and I have short videos on divergence, divergence could be 0.5% or 55%. These are just numbers that I always say. But it's just to say that it could come down a little bit or a lot, regardless of time frame. It all depends on where the price action finds support or finds resistance. So what this volume bar is telling me is that there's more sellers selling at a lower price, results in the price coming down. Let's go do the next bar. Now, same thing, we have increased amount of traders selling at a lower price, resulting in this coming down. And this wick presents buying pressure. One thing I strongly recommend is to backtest everything that mentors are teaching you. They're going to say long wick reversals. However, there have been many charts that I've seen these long wicks and the price continues going up, or vice versa. Long wicks on the bottom and the price continues going down. So let's go ahead and continue with this one. Let's go ahead and go for the next bar. Now what this volume bar is telling me is that there are fewer traders buying this token. However, the few traders that are buying this token are willing to buy it at a higher price, resulting in this candle being green because now it's higher. And then once again, this volume is showing that there are fewer buyers, but the buyers are willing to buy at a higher price, resulting in this really nice candle body. Now, since it did close above this level and especially this level, for me, I would personally enter right now at this current body candle close and also have a lower entry just in case it comes down, which more than likely it will, to about right here, and then maybe even one down here, but we'll just do these two. And let's see what happens. And this is what I always recommend. Use this replay button and backtest everything. So let's go ahead and do the next one. So this should have been reversal. We have low volume, increased price, increased price. This should have come down. But remember, we're trading against people. People are seeing that it broke out of this level, and they want to get into this trade because this one's going to the moon. That's what they all say, right? This one's going to the moon. So they're entering this trade and it resulted in increased volume. So more buyers and sellers are happening right now. So price is coming up. Now we do have some sell pressure. This does not mean that it's going to come down. We have a higher probability that it might come down, but once again, nobody knows what's going to happen until after the fact. My lower entry is still here just in case we do come down and bounce off of this. If we continue going up, what we do is we wait for a retrace and then we enter the trade. But let's see what's going to happen. So the next candle, it continues to go up when there should have been a retrace due to divergence. Now this is telling me that we have fewer buyers. However, the buyers are still willing to pay a higher price. And it'll continue to do this till we have more people coming in, which is volume, and the price may continue to go up. And now finally, we have people taking profit. So now this is a bunch of sell pressure. This is saying that the price may come down, but it's not guaranteed because we may get more volume, people buying and selling, to continue driving this price higher. So this volume bar is saying that there was more people selling at a lower price. And we can see that by the candle. The candle ended up closing underneath where it opened, causing this to be red. And now this next candle, price did come down, lots of selling pressure. Now, of course, the price did come up all the way up here, but then there was more sellers selling at a lower price, driving this price down, hitting our lower entry, continuing to come down, and now buyers are stepping in. In the very next candle, the buyer stepped in and shot up the price. So if you're looking at volume, it's very hard to determine if the price will continue going up as a continuation or possibly even reversing, because the volume is always changing. You could have increased volume with the price coming down, and that is saying that there's more people selling at a lower price. Or you could have volume going up, and this just means that there's more buyers buying at that current price, driving the price even higher and higher. And the volume can always change. So right now we can see that this segment right here is higher than this segment right here. So if you wanted to, you could look at different segments of the trade, of the trading volume, but this can always change. And this is why I base my trades off of support and resistance. And now the volume continues to grow and the price continues to go up. Now we have a very long selling pressure wick. However, the candle is still green because it closed above the open. Due to this wick, I'm led to believe that the price action may come down. It could continue going up, may come down to about here before it goes up. But once again, nobody knows what's going to happen until after the fact. So let's go ahead and play this. Let's see if it continues going up or if it comes down and it continues going up. Now, the other mentors will say when the price action was right here, long wick reversal, because they can see what happened. However, they won't say long wick reversal here because they can see what is currently happening. All these mentors, what they do is they read websites and they regurgitate what they've read. In addition to that, they always tell you after the fact. If you simply trade off of support resistance, the support will be support until it gets broken. The resistance level will be resistance until it gets broken. So in closing, if you have price going up and you have volume going up and then it goes down, this does not mean that the price will also come down due to divergence. This just means that there are fewer buyers at the current moment, but these buyers are willing to buy at a higher price. Now, eventually the theory is the amount of buyers, which is volume, should be exhausted, causing the price action to come down. However, if people see that this price is going up, they're going to enter this trade, causing the volume to come up and the price action to continue going up, because now we have more buyers buying at a higher price. Volume is always changing, and for that reason, I do not use volume when I'm looking for breakouts. Here's a pro tip. My definition of a breakout, a confirmed breakout, is when the candle body closes above the area of resistance. That is a true breakout. My definition of a retest, a successful retest, is the very next candle, or if you want to be safer, several candles, 2, 3 candles, after the breakout, a successful breakout, as long as the retest candle does not break below the area of previous resistance. As long as it stays above this level, this is a successful retest. The more candles that do not break the area below, the stronger the retest. Because you're going to notice that during the bull market, all these mentors, they're going to be saying, buy the breakout, add on retest. And you're expecting it to come back down to the area that it broke out from to do your retest. However, you're going to notice that most of these coins, when they actually do the breakout, keeps on going, and then now you're waiting for the retest and it comes down just a little bit before breaking up. What I teach is you can buy some on the breakout, a third, wait for the retest, wait for it to find support. The way you know it found support is several candles didn't go lower from wherever it stopped. It created a pivot. Then you could add here. This is a little bit more risky than breaking its previous resistance level. This is the safest area, once again, to enter. The candle must close. The higher the time frame, the stronger the support resistance, the stronger the breakout, the stronger the retest. The lower the time frame, you're going to be entering these coins sooner, so you can have potential higher gains. However, you also increase your risk of a potential fake out or even getting stopped out. If you found this information valuable and you haven't already, definitely smash the like, definitely subscribe to the channel, make sure that notification bell's on, and let me know in the comments if you've ever heard a mentor or somebody on YouTube saying buy the breakout with volume confirmation without explaining what volume is. And if you haven't already, make sure to join the VIP group. We go over several different strategies: day trading, short-term, mid-term, long-term holds, investments. We go over several different trading styles. This is a beginner-friendly community. And of course, we do have seasoned traders that absolutely love the trading style. We have screen shares. I absolutely love doing chart reviews. The members, they'll post the charts, and I'll actually do a video thought process on that chart, drawing on the chart. That way you know exactly where I'm talking about, and I explain the whys. For me, that's very important to understand why I'm saying what I'm saying. We go over spot and leverage trading techniques. Of course, we give you trading setups, and it's not like all the other groups, 10, 20 charts a day, and that's for the market actually takes off. Once the market takes off, you're going to see they're going to do 20, 25 charts a day minimum, just so they can post all those results. What I do is I post 1 to 3 charts per day, and more than likely during the peak of the bull market, I might post 5, but I try to keep the post as minimum as possible. That way, when we show results, you have a very high probability that you're in those trades. So make sure to reach out to me on Telegram so we can get you in the VIP today. Thank you so much, and we'll see you in the next video. Let's make this money.